Welcome to the Icon on Pima Preferred Equity Investment webinar. I'm Gary Lipsky, president of Break of Day Capital. We're currently refinancing Icon on Pima, a property in Tucson, and raising $2 million of preferred equity. The investment sits in second position with a meaningful equity cushion beneath it, offering investors an attractive risk-adjusted opportunity. The investment is projected to provide 5% current pay and 10% accrued annual return and significant bonus depreciation benefits. What makes this opportunity particularly compelling is that the heavy lifting has already been done. I'm really proud of the work our team has done here. We've invested approximately $1.2 million into the property, completing substantial capital improvements and enhancing the overall quality of the asset. Today, the property is in excellent condition and well-positioned operationally. Here's a disclaimer. Feel free to pause the video and read through it. More information. All right, so a little bit about Break of Day Capital. If you don't know much about us, we focus on the Southwest markets. One asset class, multifamily, that's all we do, and only a few markets, so we could be experts in those markets. We've raised over $110 million to date, distributed over $40 million. We've selectively acquired over 2,100 units, and asset management is our focus. I wrote a best-selling book on that. On our first 11 deals, we averaged a 40% bump in NOI in year one across our portfolio. But it's a team behind me that drives our success. Tim is our director of asset management. He's led asset management and redevelopment of over $4 billion in multifamily assets. Joe, our director of investor relations, has invested in over 10 of our deals and started off as an investor and came aboard. Jacqueline is our operations manager. She handles all the stuff behind the scenes. Andy is our investor relations manager, over 20 years of overseeing institutional and private investment portfolios. And Tana is our analyst, and she's got 10 years of experience driving financial analysis. We also have two co-GPs, Guido and Dan. And between the three of us, we invested over 38% initially into the deal. So when I talk about 38%, we're aligned with our investors. We raised over $110 million, and 10 of it came from myself and my team. We've had 4 full cycle exits in Arizona, and we currently own 9 properties there. Here's a quick look at our portfolio. So this is what the property looks like now. Major transformation from when we bought it. New pool furniture. We redid the pool area, the landscaping, new signage, new gym, repaved the parking lot. So we bought this in October 2022. 80 units, $9.5 million purchase price. Paid a really good price at that time, $118,750 a door. Our current loan that we're refinancing to, as it stands now, should be $6.8 million. 2 points of that will be used to pay down the interest rate. So the loan will be closer to 6.6. But with the fees, it's 6.8. Estimated loan, 6.1%, 5 years IO, 5-year fixed. Like I said earlier, on the preferred return, 5% current on based on cash flow, 10% accrued, 68% projected cash flow year one, bonus appreciation, and more going forward. So if you invest 100,000, your K1 should have about a $68,000 loss on your K1 for 2026. So you'll get that in March 2027. Funds raised for this will be used to pay down the loan, cover the closing costs, fund CapEx reserve, and legal expenses. And investors in this tranche will hold a second position behind the senior lender. And this is a stabilized asset with occupancy in the low 90s. Here you can see a breakdown, pretty robust unit mix for this property. So where did our $1.2 million go? Like I mentioned before, um, we also replaced the boiler, painted the property. So we drastically transformed this property. It's a beautiful property now. Residents stay longer because of that. It's easier to attract uh, residents as well, and this will last us well beyond our hold time. So when we go to sell it 3 to 5 years from now, the property will still look really good for the next buyer. Here's our pro forma. We have conservative growth over the next years. For those of you that don't know Tucson well, like I said, this is our 12th property that we own there. Over 1 million people that live in the MSA, so good workforce, really diverse job market. That's why we like Tucson. Also because above average population growth, above average job growth. They have low insurance costs. We don't have natural disasters in Tucson, and a fixed um, real estate taxes. It doesn't go up more than 5%. We don't get reassessed every year. So those are things I like where it's much easier to build a pro forma that way when we don't have such varying degrees where some other states have such variability in their budgeting. So we're starting to see some positive rent growth going forward based on reports from Yardi, CoStar, RealPage, Apartments IQ, which is nice to see. And so why Tucson? I mentioned a lot of those things before. What I haven't mentioned is the massive economies of scale that we have, working with vendors, all the data points we have by having such large scale in Tucson, 1,600 units over 9 properties. And Tucson is one of the lowest cost of living cities in the United States, which we really like as well. So investment highlights, like I said, that 15% annualized preferred return in second position, really nice bonus depreciation, 3 to 5 year timeline, and we bought it at an excellent basis, a position to take advantage of the next 3 to 5 years. We've had some pullback in the last few years, and every time we've had a really nice run up for a long period of time, and that's why we're positioning this property for that. So if you're interested, click on the link to our investor portal. There's my email. If you have any questions, happy to talk through, answer any of them. I appreciate you taking the time to watch our quick video on our Icon on Pima opportunity. We think it's a heck of an opportunity and looking forward for you to participate in it with us. Thank you.